What's going on, everybody? It's your boy C-Zar, and we are talking about Kaspa today. It is the 28th day of November. Here we are sitting at about 5.8 cents right now with 5 hours and 53 minutes left in this day. Hit that like button, subscribe if you want to see more content like this, and let's get into it. I think it's very obvious what Kaspa is doing here. And if you guys didn't catch my last video on Kaspa, we came up with a very sound theory. And I'll do this very briefly before we get into the short-term stuff, but a very sound theory in that Kaspa had its own bull market, right? It had its own bull market. Everything else, you started in June of 2022. Most altcoins didn't even start to pump until like April of this year or July of this year. Maybe at best October of 2023, right? But you started your own bull market without even Bitcoin. You started your own bull market, and I think you also had your own bear market. I want to make this short, but we can attest that this is a bear market because from a high to a low here, I mean, you have dropped 82%. Overall, you dropped 95%, with the scam wick from the 10th of October. Maybe that's real, maybe it's not. Maybe you do have lower to go, I don't know. But the reality of the matter is your high, your all-time high happened. Was it here? Let's see. 20.7. Yeah, here. It happened in July of 2024. You have been in a bear market now. Absolutely, you've been in a bear market because it's been a year and a half that you've been lower highs, lower lows. How is that not a bear market, right? That's absolutely a bear market. The thought here is that Kaspa may be done. It may have had its own bull market and its own bear market, and it's done, and it's ready to start a new cycle altogether. Perhaps because you saw one of the largest bull runs in your first run ever. You saw a multi-thousand X. I think you saw like a 2,000x from the low to the high, at least 1,000x. It was crazy, and just nonstop upside. Maybe you have more downside to go. Maybe you're expected to have a longer bear market because of it. I don't know. But there's a working theory here where that low that we found this month right here could be the low. It's a perfect area to find support. Doesn't mean it has to be, but it makes sense to me. Anyways, with that perspective for the long term, I think it's more than appropriate, not financial advice, not a financial advisor, more than appropriate to start accumulating Kaspa at these levels, right? Very appropriate, because likely in the long term, maybe not next month, maybe not the month after, but probably sometime in 2026, you will see a 33 cent to a 61 cent price, and beyond. From the current price, that's anything from about a 5.8x to about a 10, almost an 11x move. And that genuinely, these prices, what's crazy is these prices could be achieved by the end of Q1 in 2026. Maybe even by the end of January. It depends on what Kaspa wants to do. It's kind of doing it. If we're basing our thoughts off of what the rest of the market's going to do, I don't know if we're in the right standpoint with that because Kaspa has not done with the rest. Other than the drop on the 10th of October, there's no symbiosis here. There's no community with Kaspa and the rest of the community. It does its own thing. So again, you could start your own bull run at any moment, and if you started off like the last one, you might start off with a bang. It really could be the end of January that you're up here at 33 to 61 cents. I'm not saying that that's going to happen. I'm just saying it wouldn't be the craziest thing. You've been in a year and a half long bear market. You might be due for some type of upside, and whenever it is, whether it's in January, whether it's in February or March, or maybe it's longer, but sometime soon enough, relative to how long the shop's been, you should see new all-time highs. And the very first target area that we're going to consider for resistance is anywhere from 33.4 cents to 61.3 cents. Okay, could you go higher? Yes. Could you stop lower? Probably not. But yes, anything's possible. But probably in that area. And yes, I would believe that you do continue higher. If this is the end of a full bull market and the end of a full bear market for you, KAS, you've got further potential. You probably would see anything from a $2 price to $3.53 price by the end of your next bull cycle, which, overall that's like a 34 to a 65x, and maybe more. Time will tell. These targets are subject to change. If this isn't the low, if you have lower to go, these targets will change, right? They'll only go higher as you go lower. Look, the 1618 here is at 61 cents. If you saw, instead of a low at 3.6 cents, if it was at 2.1 cents or somewhere around there, it goes from 63 cents to 85 cents. You know what I mean? So it increases the lower it goes. But let's stop talking about this. We've talked about the long-term stuff enough. I didn't want to focus that much on it. I really want to talk about the short-term stuff. Again, if you want to watch the long-term stuff, I think we do a better job of that. In my most recent Kaspa video, I think that the title is something like, Kaspa, is the bear market over? something like that. I made it on the 15th of November for references. Anyways, 5.7 cents now. I think it's very obvious what we're doing here. What we're doing is a V-shaped recovery. It's a V-shaped recovery, plain and simple. It's textbook. It's perfect. You came down, you came up, it's a V. This part of the V is typically faster than this part of the V is, and it looks like it here, more voluptuous. Typically what you do is you end your V just above where it started. So if your V started here, here you are, just above it, you consolidate. It's very common in these V-shaped recoveries where you stop just above the beginning. It's very common that this part of the V turns into like a bull flag that sends you to higher prices inevitably. So what we're doing right now, all I'm trying to get to is we're above the V, where the V started. We're at prior points of resistance here within this little range. We broke out. We haven't consolidated. You moved up in a straight line. You've moved up like 70%, haven't you? From a low on the 21st to the high, you moved up 72%, 73%. You're probably going to consolidate. It's the weekend. It's Friday, so tomorrow's Saturday, Sunday. You just had a nice move up. You're probably going to consolidate. Pull back a little bit. Where are you going to go? Not financial advice, not a financial advisor. What I'm saying here is don't FOMO at 5.8 cents. We likely have lower to go. But likely, I would think, the low that you have will be a higher low and something to build from. What's nice about this is you took out this high, so there's no thought of us having an inverse head and shoulders. You're probably not going to go down to this low here. You're probably going to find wherever your low is, it'll probably be above this low. Okay, let's put some fibs on there and see if there's anything that makes sense with Fibonacci retracements that are above this level. Yeah, the 786 is right there. That's a perfect area to go to. But with this, you could pull all the way back to your golden ratio, find a higher low, and still be fine. So accept that from here, 5.8 cents KAS could, doesn't mean it will, this is not my prediction, could drop back to 4.28 cents to 4.46 cents. Okay, that's the lowest that we could go to. Well, we could go lower. But if we were to maintain this kind of idea that this is the low and that we're going to move higher, I would like it more if we found support of the golden ratio. Okay, personally. At the lowest. We can find support lower, but I would rather it be at the golden ratio at the lowest personally. That typically signals strength and a little bit of volatility too. But what's very common with these V-shaped recoveries is that you stop and you consolidate at the top here. You don't whip all the way back down. Not that that can't happen. It has happened before. I mean, look, you had a V-shaped recovery here. That boom went down, but it was a failed V, right? Failed V. Here you had a successful V-shaped recovery. You consolidated just like I was talking about, but you broke down. It can happen. It's just statistically it's improbable. It's not likely. And this is a little bit more of a real deal V-shaped recovery, not just like a bull trap, right? And maybe it is a bull trap. The time will tell. All I'm trying to say, it'll be validated as a bull trap if we. That's the hard part, isn't it? Let's see. I would say if we. Really, it's only the most cut and dry way to say it is it's validated as a bull trap if we close below 3.84 cents. But I don't know if we do that. It might be time to start getting scared if we do close days below the golden ratio, but it depends on how we do it. The most common thing, I keep getting distracted, is that with V-shaped recoveries, you consolidate like this. And likely, you move higher. V-shaped recoveries are typically bottoms, not points to form a lower low from, typically. Typically being the key word here. At least at this magnitude. And then beyond that, with powerful moves, with a powerful retracement, you typically would expect to find direct support at the 382. Right there. You go right to it, you bounce right off it. Sometimes, and oftentimes enough even, you wick just below it and then you close above it. Okay. So 5 cents, 5.08 cents, maybe even just a little bit below there is my personal call. Okay. We talked about the golden ratio. We talked about where this thing goes bust. Talked about, maybe even the 786 is a possibility, but these are at the low end. The golden ratio is what I'd like to see us hold. I wouldn't like to see us go below there. I wouldn't even like to see us close days below there. It's okay if it does. It's not detrimental, but it helps your cause more so if you don't close days below the golden ratio, or at least multiple days. But with the strong move like this, even with all this explained here as a possibility, to me, the most statistical probability, the most statistically probable outcome of this consolidation phase is that it'll more or less be boring and it'll take you down to about 5 cents. Just above 5 cents, 5.08 cents, but something right around there. And likely, because of how voluptuous of a move you've had, you will probably bounce right off it. But again, it's common enough to wick below. Just because you go below 5.086 cents doesn't mean that you're going to go tremendously lower, right? It's pretty common to wick sometimes below that line. But if I'm right, I would assume what you're going to do basically is form a bull flag, probably over the next week or two. Okay, might be sometime in the second week of December, maybe the first week of December, maybe the halfway point of December, but at some point you should be breaking out. You're going to be forming this bull flag, and then we should be breaking out, moving to higher prices. So, no need to FOMO the highs. Definitely a sense of urgency for the lows, because I think what's coming here, if we're breaking out, let's just expand upon this. Let's imagine that we do break out. Let's imagine we do get a bull flag and we do move higher. Let's expand on this thought. If you're breaking out, you're likely doing somewhat of a retracement of your overall bear market. From a high here to a low here, you've hit the golden ratio. From a high here to a low here, could you be going all the way up to your golden ratio, which would be all the way up at about 10 to 12 cents, maybe. Right? Again, what we're talking about here, and even then you still haven't seen higher highs. Even then you still haven't seen higher highs. What we're talking about here is a move that breaks you out of this low end of consolidation. You'll have a bull flag, and likely the measure move of that target would take you somewhere around the golden ratio. If not, at least the 0.5, if not higher. So I think sometime in December, Kaspa would at least be at 8.6 cents. If not, probably in December, you see a 10.6 to 12 cent price. Consolidate some more, and then in January, who knows? We might be trying new all-time highs. I don't know. The one thing that I like about Kaspa, there's plenty of things that are good about Kaspa that I'm probably not even aware of. There's plenty of things that I am aware of that are better than what I'm about to say now. But one thing that I do like about Kaspa is that it does its own thing. So even if the rest of the market is in jeopardy in January or in December, KAS can still move up on its own. Because it's already had a bear market of its own, right? Anyways, I don't have anything else I want to say. I think I've said everything I need to say. So hit the like button, subscribe. Thank you all for being here. Shout out to Thomas Keefe if you're watching this one. Or Keefe. I want to say Thomas Keefe. I think it is Thomas Keefe. Yeah, man. Oversold. Here's a thought, too. Imagine this. Let's see. Let's put all these lines back on here. Okay, if we were to do something like this, a move up like that, that should... it's interesting. A move up to that golden ratio, and I'm just doing like rough estimates here. I'm not really doing math or like inputting the formula, but I think that if we did get a week to close up here in this golden ratio zone, I think that would break you out of your lower high trend here. And maybe that's not the right line to use. Maybe this is a better line to use. Let's see. Something like that. I think it'd break you out of this trend. If you were to go up to the 60, I think it would. Just because where you are now versus up there, I mean, you'd probably break above. You'd break out of this. That's awesome. That's really cool, because even before you break out of the trend in your price, right, because here, even here, you still have a lower high. Even before you break that trend and before you see a higher high there, you'll likely break your trend in the RSI. You likely will. Which would have very serious bullish implications. Imagine you get a higher high on the weekly RSI, your first higher high. I guess you saw a higher high here, but that doesn't really count in my opinion. Right? A little double top there. You break this range since, really since November of 2023. This is a multi-year trend that you've had that you are setting up, I think, right now to break, which is pretty spectacular. And when I say setting up right now, you're setting up right now. That doesn't mean you're going to do it right now, but just as soon as potentially by the end of this month, or by the end of the month of December, you could be doing some very significant things on your macro scale that suggest everything that we said in the beginning is true, that you're going to 33 to 61 cents from here. I do want to keep in mind, again, as I said in the beginning of this video, more so, there's still a chance that we could go lower. There is still a chance that that's not the low. I like what you're doing here. I'm pretty convinced that you're not going to go lower, that is the low, but anything can happen. And it's important to be open-minded to that. We could be back-testing prior support for resistance now. It depends on what we do here. We can find turbulence here, that's fine. But if we straight reject, if we were to come back down to like 4.5 cents or lower, I might be a little bit intimidated. Right? You probably would go lower. And if you were to go lower, how much lower would you go? You'd probably go down to your golden ratio at 3 cents. And then from there, we can hopefully build a base to break out of. You know what I mean? All these higher prices will happen. Does it happen from here or does it happen from here? The difference really is not the destination, it's just how long it takes to get there. That's it. Hit the like button, subscribe. Thank you all for being here. I'll see you on the next one. Take care of yourselves. All right. Bye-bye.